Hi, I'm Mark Erickson, Global Head of Business Strategy for the Financial Institutions Group here at BlackRock. Thank you for joining us today for this three-part video series with the International Insurance Society to uncover key findings from BlackRock's 2022 Global Insurance Report. I'm joined here today with my colleague Kunal Khara, Global Head of Financial Institutions for the Aladdin business, to discuss how technology is serving as a major driver for investment decision-making for insurers. Kunal, you get to spend a lot of time with our insurance clients globally, and 65% of the respondents noted that technology and digital transformation were the major strategic trends in their business. How do you see this playing out with insurance clients?
Thanks, Mark. It's great to be here, and I'm really excited to talk through this. First of all, just taking maybe one step back, I think what we've seen occur just in the insurance industry generally over the last few years is a movement towards digitization. A lot of that has happened on the customer acquisition side, and then certainly in the underwriting process as well. Over the last 3 or 4 years, and I think COVID was an accelerant, we highlighted this in our insurance report in 2021 as well as in 2020. We're finding that the extension of that digitization into the investment portfolio is really starting to come into fruition at an even greater state. And one of the things that's happening in the environment today, when you look at the market volatility that's born out of a number of different factors, is the question around, do you know what you own today? And if you don't, how will you know what you own tomorrow? Is one that is resonating with insurance companies all over the world. We're seeing that as clients tell us about how they're looking at reallocating their portfolios, looking at changing risk appetites, and then ultimately figuring out how to better integrate technology into their portfolio management process. So from our perspective, and frankly, just even the insurance report itself, but our conversations with clients across the globe, they're highlighting 4 or 5 focus areas where we're spending our time in evolving Aladdin as a product and ensuring that it continues to meet the needs of this diverse client base. First off, one of the other trends that has been accelerating in the last few years is the adoption of private assets in the insurance portfolio. And so ensuring that the technology platforms they use today ultimately allow them to look at the whole portfolio all the way through, incorporating public and privates together is one big focus area. Second, we're finding that the relationship between investment books of record, accounting books of record, the data lineage, the single source of truth that exists or should exist in the investment life cycle is something that clients are really, really focusing on today. So we are, spending a lot of our time effectively ensuring that we continue to unify our investment and accounting product so that it continues to serve the need of clients in that particular space as well. A third key theme is accessing data and ultimately using multiple delivery mechanisms for a variety of investment data sources, and then integrating that set of data alongside, for example, liability data they might have inside their own organizations that drive potential customer behavior. And there, one of the things we are very focused on, again, our clients have been telling us this now for a few years, is to ensure that we can have a more open platform for them, where not only can they bring their own data to interact with data to extract out of a system like Aladdin, but also, frankly, in some cases, to bring in other third-party data alongside that. And we see this trend accelerating only because with technology moving as fast as it is allowing clients to have greater access to different types of delivery mechanisms to analyze that set of information. ALM and SAA is a theme that is resonant in the GIR, especially in today's environment. And this is another place where we are investing a lot of time ensuring that portfolio managers are able to look at altering and augmenting the asset allocations of their portfolios appropriately. And then finally, sustainability. Insurance companies have been at the forefront of this global movement. We expect that to continue, and part of our remit as we continue to develop our technology offering is focused on sustainability as well. The last thing I'll point out, there's some work we're doing in the lab, just recognizing additional innovation that's happening in the financial ecosystem around us. The blockchain is a place where we at BlackRock are doing a little bit of work to better understand the role it can play across the investment lifecycle, and ultimately just in the process of managing the post-trade aspects of a balance sheet. And then in sustainability, if I can just double click on newer sources of data, newer types of analytics that are showing up outside ultimately figuring out how better to integrate them. So Mark, that is fundamentally where we are from a technology perspective.
Great. If I could ask a follow-up question regarding ALM, which you already mentioned. ALM is the core of what insurance companies do, and under normal conditions, it's a challenge, but certainly over the past 12 months, given changes in volatility and uncertainty on both the asset side and the liability side, how are you seeing that change the way insurers are investing in ALM technology, how they're modeling cash flows? How are you approaching that?
Yeah, it's a very important point. I think, in today's environment, we're hearing that 70% of our clients that participate in the GIR are focused on their SAA, but there's a tight relationship between that and the asset liability management profile they have as an insurance company. In addition, we also recognize that while a number of the insurance community, almost 70%, are looking to maintain their current risk levels, 20% are actually talking about expanding their risk exposure. And ultimately, all of this, has an impact on the insurance balance sheet, both through the asset and liability side. So where we are spending time today is, one, creating a better integration of insurance liabilities into our technology platform, into Aladdin. Again, as part of our strategy to keep Aladdin more open, we feel like our clients will extract even greater value when they can ultimately look at changing allocations in the portfolio or assessing the risks on the asset side as closely aligned with what's happening on the liability side. And then secondarily, closely aligned with ALM, scenario analysis is becoming a bigger and bigger component of this, such that cash flows across a variety of scenarios, again, something that's been done in the insurance industry for a long time, but again, integrating that closer into the ALM process is where we are investing a lot in the product capability, such that we can deliver to clients an integrated perspective on the cash flow profiles of their entire portfolio under a variety of different scenarios, stresses in one case, but other things that potentially could be more optimistic, even as we look at the world evolving in rate markets, from an inflation perspective, geopolitics, et cetera. So we expect that while the core business insurers have around liability management and customer acquisition policy writing stays within their walls, they would like us to ensure that we are showing a tighter integration between the asset and liability side in the technology platform we deliver.
Great. Could you also double click on sustainability? You mentioned it earlier as an area where insurers are focused. It certainly came up in the GIR again. And I'm particularly interested in how insurers are operationalizing that within their ecosystems.
And Mark, in sustainability, first of all, I think insurers globally have been at the forefront of this movement. Second, if I break sustainability down into the E, S, and G components, particularly in the E component, as insurers, particularly in the property and casualty space, have looked at underwriting, policies that focus on, weather-related events, natural disasters, et cetera. There's already been a little bit of a DNA built in, I should say, inside the insurance company to think about that liability side of impact. When you now look at it from an asset side perspective, and again, bring the component parts of E, S, and G together, we're seeing a few different ways insurance companies are looking at operationalizing sustainability data. First off, reg reporting, whether it's TCFD, whether it's looking at net zero commitments, focusing on ensuring that they have an assessment of the portfolio as it currently stands, has been one primary use case and one primary way insurers are making sustainability data more actionable. Broadly, across the globe, there are 1,100 companies that have made net zero commitments. Insurers make up a big portion of that. At BlackRock, 60% of our largest clients have done the same thing. And so far, we've partnered with over 500 clients globally on their sustainability-related portfolio transformations. So I think that this trend is going to continue to be something that insurers will participate in and probably be innovators around. The other place where this is starting to show up is when you look at sustainability data, the number of data sources in that space are growing very rapidly. And every client, insurers included, trying to make a sense of the E, S, and G components of those data sets. Our goal has been to ensure that we can integrate high quality pieces of data into the platform, allow our clients to basically use that data in the ways they so choose, to ultimately drive the right level of decision making. Obviously, the ultimate goal, and when you look at, again, the net zero component of it, the climate risk component of it, is to make sure that portfolios are constructed with, potentially net zero commitments in mind, or ultimately are sustainability aware in the way they're designed. There is a spectrum here across the insurance landscape where some clients are ahead of the curve versus others. And I do think that this is a movement that will take some time. I think there's a bigger question here that I think we all have to look at as a global, as a society on some level, to see if the commitments, the thought process around getting to net zero in 2050 is going to be truly achievable or not. Suffice to say, insurance companies are going to be at the forefront of that, both as they look at underwriting and pricing risk, but then also focus a lot on the asset side and bringing the right levels of ES and G data into actionable insights for managing the portfolio.
Right. Thank you, Kunal. Thank you for your insights. Thank you to everyone who's joining us today. Please make sure to watch the other videos in this series, including a discussion between my colleagues Anna Kazan, head of BlackRock's Financial Institutions Group for EMEA, and Mark Azzopardi, BlackRock's Global Head of Insurance Solutions, and an interview between Leanda Delp, head of BlackRock's Financial Institutions Group in the Americas, with Christopher Castaldo, Chief Financial Officer of QBE. Thank you.